Welcome to the Realty Plus Real Talk series, where we talk to industry experts to know their honest views and opinions and real facts and figures. And today we have with us young and dynamic real estate entrepreneur Aryaman Veer, founder and CEO MYRE Capital, which is a tech-enabled platform that provides easy access to a curated selection of rent-yielding commercial real estate assets. So Aryaman, first of all, a very warm welcome to you and a very happy new year.
Likewise, thanks Sapna for having me and Happy New Year's to you as well.
Thank you so much. So, I just mentioned that, the company that you are heading provides easy access with transparency to retail investors for commercial real estate. So what is the MYRE Capital's business model, and what benefits and returns can a small retail investor expect through this model that you are working on?
Sure. So, to describe the model a little bit, I'll first just discuss the two main problem statements that we are trying to address. So, traditionally, commercial real estate has been a very exciting investment avenue, especially for your institutional investors and HNIs. You get a very competitive sort of rental return as well as capital appreciation over time. So, that's why a lot of large investors gravitate towards it. But the smaller investors haven't been able to access the asset class altogether. So, this has predominantly been you can say to some extent, a exclusive investment class. And what we are trying to do is, position the same asset class at a level playing field for all investors. So, people can invest at any ticket size with us, 25 lakhs, 50 lakhs, and get access to the same kinds of properties. The second part to this is that, especially in a time like today, when we are going through a pandemic, inflation rates are high. A lot of people want to invest in fixed income, hard assets, and overall the fixed income space has drastically gone down. Your FD rates are 5-4%. Your fixed income has also dropped. So to that end, commercial real estate becomes even more attractive, and in fact, during inflation, is a safe haven. So trying to create a product which fits the current demand is what led to MYRE Capital. And of course, our intention is to democratize this entire asset class for all kinds of investors.
That's right. So for a small retail investor, as you mentioned, that it's now opening up this asset class also, which used to be high investment asset. So what would be the minimum investment are we looking at for a small investor, and what is the kind of returns they can expect?
Sure. So for any investor, because real estate at the end of the day is a patient investment product. So it's not something like a equity stock which you want to get in and out very quickly. So effectively, we've still kept the ticket size relatively high when you benchmark it to other investment products at 25 lakhs. But this is considerably smaller than the entire property cost of, let's say, 50 crores. So to that end, 25 lakh is our minimum starting investment as of right now. We are looking at ways to sort of further make different products in the same category. As of today, an investor can go to our website, browse the sort of different opportunities we have live, and invest accordingly. Now, with respect to the returns, each opportunity has its own sort of pros to it. So, for example, our current opportunity, in fact, the one we just wrapped up, that investors were earning about 8%, as an entry rental yield, and they were benefiting from additional capital appreciation as well. So to that end, a lot of our properties are within this bracket, where we at least try to deliver investors between about 7.5 to 9%, rental income.
Okay, that's not bad. That's pretty good returns, what you mentioned here. But there are a lot of speculation. Recently, we have seen that housing market is doing really well. People are, would like to buy houses, upgrade their houses. A lot of concerns around commercial, especially office real estate, that hybrid model is going to work. How the offices space demand is going to be. How the office spaces will shape up. But you have been quite bullish on this sector. You have added a lot of assets in this portfolio. So what are your reasons for being your bullish outlook on this sector?
Sure. So, with respect to how we evaluate these properties, especially in a time like this, there are two fundamental aspects which go into investing in fact, any asset class. So, in a time of stress like right now, when there's a pandemic, when there's limitations, usually your A grade, assets tend to stand out. They tend to be more stable. You see a lot of fluctuation and volatility in your B grade assets. So nothing in the fundamentals have changed really in commercial real estate, and it's been a very bullish market for the past 5 years. In fact, we've seen more foreign fund flow into commercial real estate in India in the last 5 years than anywhere else. You have your Brookfields and Blackstones coming in. So it's very important to ensure that the underlying asset is A grade to avoid any sort of distress, vacancies, and things like that. So just to give you a benchmark, we've had 100% rental collection as well as distributions. So that came on account of us building this quality of portfolio that gives us that stickiness with tenants.
Okay. Okay. So, in fact, we have been talking about the business model, where investors with smaller amount, which is a fractional investment ownership model. A lot of HNIs and NRIs have shown a lot of interest in this model. What could be the reasons for their, interest, especially in recent times when they are looking at property investment in India? This is one of the routes that is interesting them quite a lot. What is the reason for that?
Yeah, so NRIs and in fact Indians in general like rental income. They like investing into real estate. The primary challenge for NRIs has been that accessing real estate or getting opportunities is not very easy, especially them sitting abroad. Even if they manage to acquire something, the management, upkeep, maintenance of the property becomes a very big headache. So that's one of the main reasons they are preferring this solution that we are providing, where we take care of everything end to end through the life cycle of owning the property. And we actively monitor, we actively sort of work with tenants and things like that. The second part to it is that NRIs have very often their family in India, and they want to create cash flow for them. So quite often an NRI might want to, give his parents or his children a stipend every month. So to that end, they invest, and the rental income becomes that stipend for the families or relatives in India.
Okay, so that's interesting. One is, it's very transparent, very easy for them. They don't need to take care of the property. And secondly, as you mentioned, it's a consistent fund flow for their relatives or the families back in India. So that's one good reason. I believe that yes, NRIs are looking at it. Also, warehousing and industrial parks. Again, it's an asset class which has gained a lot of attention, especially during these past 2 years, given the e-commerce has boomeranged during COVID. A lot of investments are coming in. Are you looking at these segments also probably in coming times for fractional ownership model for investors?
Absolutely. So we are in fact evaluating a variety of assets. Now each one comes with a lot of underlying risk. And since we are dealing with retail investors and a large scale platform, we try to minimize risk, even if we have to compromise marginally on returns. Now, the issue with warehousing has traditionally been that a lot of the investments or the investment space is dominated by opportunities which are in pre-construction. So very rarely you will find that a constructed warehouse is being offered, or at least not a new one. So a 6, 7 year old warehouse might be on sale, but usually a new one isn't. So getting in pre-construction has its own set of risks, and we are evaluating them. But it's just very important in times like these to ensure that you are walking on the more conservative side when it comes to the selection process.
That's right. You would like to minimize the risk, but you see this as a one potential asset class. Probably, maybe it's not ready as of now, but in next 3-4 years, you see this as a potential asset class where investments like REIT and fractional ownership will be, foraying into.
Absolutely. In fact, warehousing is a very interesting space. So we have explored quite a few, in fact, partnership with corporates, with MNCs to set up the entire park with them. So we are working on a couple of interesting opportunities whereby we can internalize the risk and control it, as opposed to having a third party person sort of being responsible of that risk. So we are coming up with something interesting. We hope to launch it in the middle or end of this year, but we do want to be very systematic when we approach warehousing.
That's right. That's right. Coming back to the office space, we have been a lot of articles have been written and a lot of stories have been written on how office space is changing, how way of working is changing. What is, yeah, because you are into this space, you are making investments into this space, what is your reading? How now we are in 2022 now. So what is, how this space is going to shape up?
Sure. So, a very interesting thing that happened during the pandemic, a sort of silver lining, you can say, was that a lot of the companies and MNCs, large organizations, have become more dependent on digital technology. So everyone is gravitating towards building a larger IT setup, creating tech solutions. And India is effectively the ITS hub, of pretty much the entire world. So all the IT outsourcing happens from India, and that's predominantly what has driven office space demand over the last 5 to 10 years. Now, why the ITS companies prefer India is threefold. One is that you get access to great talent, that also at relatively very affordable prices. The second is that a lot of these A-grade buildings, they are available, at under $1 rental per square foot, which makes it very attractive, especially for these US companies, UK companies. And the third is of course, the overall access to a cheaper environment. So their overall cost of operating becomes very low, and they're able to outsource a lot of their heavy lifting to India. So we are seeing, in fact, more and more traction coming in from tenants. A lot of IT companies have expanded
Right.
because of the low rental. They haven't vacated because rentals for IT companies only make up about 1% or 2% of their top line at most. So overall, the demand in these ITES pockets have not really depleted. In fact, now we are seeing a major uptick with companies even asking for expansion plans.
Okay, fantastic. So one is the pricing, and second is the attractive work, manpower, and the infrastructure that India provides for MNCs, for their back offices, for their back end works. And as you mentioned, not much has
Absolutely.
been in terms of leasing. Not much has changed. In fact, now we are looking at more hiring and probably more uptake of space. So that's a good sign for Indian real estate. Another question that always comes is, as you also spoke about, the digital, even the most traditional of industries like real estate has become, more digital during these past 2 years. Uh, for investments, when the transactions are online, when the transactions are digital, how is that space changing? What is the confidence of the investors, when they are transacting digitally? Because for Indian investors, especially, it's more like touch and feel. They still believe in that. So how that space has changed?
Sure. So, in real estate, especially touch and feel is important. So, what we try and do is give as much touch and feel as we can digitally. So, we are trying to integrate, virtual tours, 3D renders. We do a drone footage. We provide them end-to-end analysis, data points, images, everything that they basically require, short of actually visiting the premises. The idea really is to make investing in commercial real estate as seamless and quick as maybe investing in a mutual fund. So today someone can go on our website and invest in under 5 to 10 minutes. So that was the basic intention of this whole process. We want to remove the entire cumbersome part. That's effectively what we take care of, and investors can effectively just come, review documents and onboard themselves.
Okay, fantastic. So what has been the response till now?
Sure. So whenever a new category sort of emerges, especially an alternative investment avenue like commercial real estate or fractional commercial real estate, the one major part of user adoption lies in educating people about it, raising awareness. So we've been talking a lot about fractional. In fact, this whole category has really grown in the last 2 or 3 years, and because of that, the overall adoption is coming in. We are seeing large scale investors participate on our platform. In fact, we've secured investors from over 16 to 18 countries. So overall there's a lot of acceptance. We're also seeing institutional investment banks approach us now to take up a mandate where they'll invest X amount in each of our offerings. So just things like that is becoming a lot more mainstream. So we are very optimistic of the coming year. We saw a lot of growth in the last 4 months, in fact. So we are very excited to see how our new technology that we are launching, in fact, this month, gets accepted by people.
Okay, so fantastic. The response is good. People interest is rising. What are the challenges? In terms of what a lot of challenges, as you said, first of all was the awareness, and people need to know what this is exactly about, be more confident, so that probably being taken care of now, more people are aware. But what are the other challenges that you think you might be facing moving forward?
Sure. So one of the major challenges is, of course, the asset selection process, because in India, a lot of the good properties are either fund owned or they get, effectively consumed by HNIs. Now, it's very difficult to identify these good opportunities, the A-grade properties, and shortlist them. So what we've started doing now is we've integrated a whole tech lab where this whole evaluation, or you can say first layer of evaluation process, gets done automatically. We've developed in-house algorithms which can evaluate about 200 properties at a time and give us a short list of 10. So we are integrating tech to alleviate that problem, but effectively that was the one of the challenges we were facing last year, where we had to evaluate 300, 400 properties a month before finalizing one. And now, since our entire tech has taken over, it's become a lot easier.
Okay, so the right product is not available. That is one of the biggest challenge now. So I'm sure for real estate developers, there's a lot of opportunity there to have, to build grade A commercial spaces, office spaces. So that's one. In terms of your own expansion plans, you look forward to adding more assets by March 2022, as you had mentioned in one of the statements. So what are your growth expansion plans in terms of the growth of the company and the geographical footprint that you are looking at?
Sure. So in terms of the growth of the company, we are growing on two major aspects. One is, of course, in-house the team. So we are looking at doubling the team size within the next 3 months. So we are very actively hiring. The other, of course, is with respect to our entire assets under management. So far, we've aggregated about 100 crores. We have plans of completing another 500 this year. In fact, the next opportunity we are launching is going to be a week away. It's in itself about a 70 crore opportunity. So we are expanding on that end as well. Overall, with respect to our geographical footprint plans with respect to our expansion, we are opening offices in different locations in India. For instance, this year we've opened up Bangalore, Mumbai, and Delhi. We are looking at Dubai as well. So recently we've been exploring different places in Dubai where we can create an office, because a lot of our NRI investors are from Dubai. So we are trying to expand globally. That way there is a local touch point for any investor, as much as possible.
Right. And in terms of assets, what kind of cities you would be looking at?
Sure. So we are overall considering, most T1, T2 cities in India. We've only done T1 cities so far, predominantly because we've been on a very conservative side because of COVID. Our next opportunity is in Bangalore. In fact, it's in one of the most prime locations in Bangalore. Apart from that, we are also looking at cities where you can get opportunistic deals, especially in the hospital space or schools. We are looking at different types of assets in commercial real estate. So overall, we are open to pretty much any city, but the next one should be in Bangalore.
Okay, fantastic. Another thing, maybe not many people know, you belong to designers and architects family. So how come you came into the real estate and that to investment? So what was the reason that, coming from that background, your interest was in this segment?
No, absolutely. In fact, real estate has been the dinner table conversation for as far back as I can remember. So it's something which was just inbuilt. I did most of my education, I guess, for 10 years, my undergrad, master's, specialization, all of it in engineering, tech, big data and things like that. So effectively, what we're trying to do at MYRE is, create an intersection between the tech part as well as the real estate. And the investment side comes from effectively my entire work experience. So after engineering, I pivoted to finance, and that's the additional element that
Okay.
we added to this whole
That's
platform.
fantastic. So you understand the design aspect of spaces also, you understand real estate and technology. So what better than to bring them all together and, create something new. That's fantastic. So before we let you go, as a young entrepreneur, as a young, uh, uh, generation of real estate professionals, what is your outlook? We have heard a lot of budget sentiments, what people are looking at, expecting from the budget. What are your sentiments going forward? I believe we are going to live with COVID now going forward, so things probably are going to continue the same way we are doing now. So what is your outlook for future, for near future? What are your expectations that the budget should have for this particular segment, what they can provide?
Sure. So, overall, I do expect certain decisions in the budget to be taken, accounting for the fact that it's COVID, for the past 2 years, maybe another year or so more. However, I think in the longer term, the budget will sort of move back to where it was originally in terms of its policies and guidelines, predominantly because, like other pandemics, this will get normalized. The flu was something which was far larger than than what COVID is today. It was far more widespread, and today it's become commonplace. Even with this strain, we are seeing less severe illness and things like that. So overall, I think that whatever decisions are taken on basis COVID in the budget won't be for the longer term. With respect to real estate, we have seen a lot of good policies, regulation, and things like that come in. For instance, the entire REIT setup we've seen come across the last 3 years. The tax incentives that have been given have been given to the REITs, to encourage retail investments in real estate. So overall, I think as the entire industry becomes more mature, the budget is systematically and incrementally allowing for it. So, they are making enabling policies and frameworks for real estate as a whole marketplace to grow. So overall, we are quite optimistic with respect to where things are going with the budget, especially with the opening up of REITs, with the growth of fractional ownership platforms and the acceptance of the same. So overall, we think that there'll be a lot of progress in the coming years.
Okay. And what's your outlook for what's your message for the young professionals who are coming in this segment in real estate? What's your message to them?
Well, it's a very interesting space, but a lot of people sort of jump in without really understanding the space, especially in real estate. So I think it's quite important to understand what you're getting into first, and then accordingly make the decision. And the reason I say that is real estate is one of the very few, you can say, overall fields that isn't formally taught anywhere. There are various verticals of real estate that are taught in colleges, but real estate as a segment in its entirety is not really taught somewhere. It's usually done just through work. So quite often people feel lost when they join initially, in real estate. But effectively, if you push through it, most people figure it out.
That's right. That's a very important point that you raised, that we do not have enough formal institutes or colleges to teach real estate. There are now some coming up, like Amity, and Hiranandani has started one, but very far and few in between. But that's a very good point, Aryaman, that you raised. And as you mentioned, that the outlook seems very positive for the sector, especially budget seems pro progress, pro business, ease of doing business. It seems like that, and they will be keeping in mind the COVID situation, and the policies would be favorable, as you mentioned. And this space, the fractional investment and REIT, as you mentioned, again, a very interesting space where the real estate is moving, and most importantly, the investors are more aware of this space existing, and they are very responsive to it. So I think overall very good for sector, and with young professionals like you now taking the lead, we are very hopeful for Indian real estate. Thank you so much for being here with us and sharing your insights, and very good luck to you. Thank you so much, Aryaman.
Yeah, thanks. Thank you, Sapna. Thanks for your time and thank you for taking the interview.
Thank you.